Welcome back to Explain the Charts. Today, December 4th, 2025, we're diving deep into Tesla, ticker symbol Tesla, which is currently trading around $448.70 according to the latest market data. The overall sentiment around Tesla is quite mixed, with several significant news catalysts influencing its recent movements. On the bullish side, there's considerable excitement stemming from the Trump administration's reported plans to prioritize robotics development, a move expected to significantly benefit Tesla's Optimus humanoid robot project and broader AI initiatives. Adding to the positive momentum are encouraging sales figures from China, Tesla's second-largest market. Reports indicate a notable 9.9% year-over-year increase in November sales from the Shanghai Gigafactory, marking the largest sales growth in 14 months, which is definitely a good sign for the company's core business. However, it's not all sunshine and rainbows. High-profile investors like Michael Burry, famously known from The Big Short, continue to label Tesla as ridiculously overvalued, citing concerns over slowing core automotive growth, pressured profit margins, and the significant capital burn on AI and robotaxi ventures. Indeed, reports highlight a notable decline in Tesla's UK and European car registrations in November, suggesting regional demand issues. Furthermore, while Elon Musk recently claimed the Austin Robotaxi fleet would double in December, reaching around 60 vehicles, this falls significantly short of his earlier ambitious targets, raising questions about the pace of FSD and robotaxi deployment. Let's now turn our attention to the charts to see how these fundamental developments are reflected in the price action. Looking at the one-day chart, the journey from July 2024 to early December 2025 has been a roller coaster. We can observe a significant downtrend from July 2024 highs around $250, bottoming out dramatically around $214.25 in April 2025. This sharp decline correlates with news of declining revenue and tighter margins, as well as concerns about slowing growth mentioned earlier. However, since that April low, Tesla has shown a remarkable recovery, nearly doubling its price to the current levels, suggesting a strong bullish reversal. The 52-week low of $214.25 acted as a very strong long-term support, from which the price bounced aggressively. Conversely, the 52-week high sits at $488.54, achieved in December 2024, representing a significant long-term resistance level that the stock is now approaching. We can see a strong upward channel forming since the April lows, with consistent higher highs and higher lows. The recent surge in October and November 2025, from roughly $410 to the current $448 range, is particularly notable, driven by the positive robotics and China sales news. Volumes have been substantial during these upward moves, reinforcing the strength of the rallies. The area around $400, a key psychological level, has transitioned from resistance to a crucial support zone following a strong breakout in late October. Let's narrow our focus to the recent price action on the one-hour chart to examine the short-term trends more closely. Here, we can clearly see the strong upward momentum that has characterized late November and early December 2025. Notice how the stock broke above $420 with conviction in the last week of November, establishing this as a new short-term support. The hourly candles are consistently closing in the upper half of their range, indicating sustained buying pressure. We can also observe periods of consolidation, like the tight range between $428 and $432 in early December, which then resolved to the upside. The volume during these upward pushes often exceeds average, confirming institutional interest and strong buyer commitment. The current price is hovering just below the daily high observed in the latest available one-day candle data, suggesting a potential continuation of this short-term bullish trend. However, a significant price gap formed on December 3rd, with the market opening higher at $432.10 after closing at $429.24 on December 2nd. This gap could act as a magnet for future price action, potentially being filled if bearish sentiment takes hold. Switching to the 15-minute chart, we gain an even finer resolution on intraday movements. Let's look at the trading day of December 3rd, 2025, as it provides a clear picture of how news and sentiment can rapidly affect price. The price started the day around $428.87 and saw a notable rally throughout the market hours. A strong upward move in the afternoon, particularly between 14:30 Universal Time Coordinated and 15:45 Universal Time Coordinated, pushed the price from approximately $432 to over $444. This intense buying activity likely reflects the positive news regarding the Trump administration's robotics push and the strong China sales data that surfaced around this time. We can identify minor support levels around $440 to $441 after the surge, which held relatively well despite some profit-taking. The stock then consolidated in a tighter range in the later trading hours, ending the day around $446.74, showing resilience. Breakouts above previous 15-minute highs on strong volume could signal good entry points for short-term long positions, while failure to hold key intraday supports like $440 could signal a pullback. From a long-term perspective, reasons to be bullish on Tesla include its leadership in EV technology, significant advancements in AI and robotics, and expansion in key markets like China. The potential for Optimus and Robotaxi services to become substantial revenue streams could justify a higher valuation, especially if Musk's ambitious targets eventually materialize. However, near-term bearish arguments are strong, with Michael Burry's valuation concerns and slowing core auto profitability being major red flags. The decline in UK and European sales is a tangible indicator of increasing competition and potential demand saturation in established markets. For traders, key price levels to watch are the immediate support at $440, which, if broken, could see a retest of $430 and potentially $420. On the upside, breaching the $450 psychological barrier is crucial for testing the previous 52-week high of $488.54. A sustained break above $450 on strong volume would reinforce bullish sentiment, indicating a likely run towards the $480 to $490 range. Conversely, if Tesla fails to hold $440 and drops below $430, we could see a deeper correction towards $420, especially if broader market conditions turn unfavorable or new negative news emerges. The market's reaction to future robotaxi updates and ongoing sales reports from various regions will be critical in determining TSLA's short to mid-term direction. In recap, Tesla stands at a pivotal point. Its strong recovery is undeniable, but it faces significant hurdles. A breakout above $450 is highly likely, 65% probability, if positive robotics news continues and China sales remain robust, pushing it towards the $488 resistance. However, a retracement to $430, 35% probability, is possible if negative sentiment around valuation or further sales declines in Europe gain traction, or if the broader market experiences a downturn. Always keep an eye on upcoming earnings reports, new product announcements, and any regulatory news concerning autonomous driving or EV subsidies, as these can drastically shift market perception. Remember, this is not financial advice, and you should always conduct your own thorough research before making any investment decisions. Thank you for watching Explain the Charts, and we'll see you in the next one.